So, as many of you may be aware, there's a massive global debt crisis brewing beneath our feet, and Black America in the Western world is at the worst end of that debt bubble. We're going to be covering some quick statistics about where global debt levels are and what debt levels are in Black America. And then we need to talk about how that crisis has come to be in shorter terms, what we can do about it, what you can do as an individual, a household, a business owner, and just some tactics and strategies, some takeaways to have a better understanding on how to manage debt and to also discuss the process of attempting to get out of debt and to manage it responsibly if you're in it in a negative way. So we're going to be covering a lot in this live stream. For myself, on top of navigating significant amounts of debt throughout unintentionally, I also banker, currently a retail banker, where I do business banking and also have a mortgage and deposit and investment book of somewhere between $20 and $30 million, depending on who's in it at that time. The debt levels that I am managing are very similar. So the moral of that story is I'm helping clients navigate, individually or as small business owners, 4, 5, 6, 7 figures in debt on a regular basis. And I've been doing this for over 10 years collectively. So you'll be getting this information not only, as a content creator, but somebody who's helping individuals and business owners navigate debt responsibly or try to help them work themselves out of the hole as much as possible and get to a positive place. I've also taken myself from a pretty rough place in negative net worth when it comes to debt to a positive net worth in a significant sense. And that includes taking my credit scores from significantly low levels to high levels as well. We're talking about 500s to 800s. This has been over the course of some years. I don't want you to think this happened overnight, but I just want to give you some context and a little backdrop as to, what information you're going to be getting and who you're going to be getting the information from. So just to get into the statistics really quickly, global debt is currently at a record high of $324 trillion. This includes government debt, business debt, and household debt worldwide. The world's total debt is the equivalent of more than 300% of total global GDP, which is gross domestic product. What that basically means is we have over 300% more debt than what we're producing in this world. So when we break it down to U.S. individual consumer debt, right, what you're experiencing here is going to be, as of early 2025, total U.S. household debt is approximately $18.2 trillion. This includes mortgage debt at $12.8 trillion, student loan debt at $1.63 trillion, auto loan debt at $1.64 trillion, credit card debt at $1.18 trillion. While the overall debt level is high, it is still below the peak levels seen during the 2008 crisis, which is very fascinating, believe it or not. So let's look at some quick statistics for Black households really quickly, right? Black households in the U.S. generally carry less overall consumer debt than white households, but they also tend to have lower median and average household wealth and income. Very important. The median debt for Black non-Hispanic households is $44,900, while white non-Hispanic households is $93,900. However, Black households tend to have a higher debt to asset ratio and are less likely to fully repay their loans. Extremely, extremely important. So what that basically means is what they're trying to say is we don't carry as much debt as white households, as Black households, right? But we tend to have significantly lower asset and income ratios or levels than white households. So to put this in perspective really quickly, the debt to wealth ratio for Black families is significantly higher than for white families, reflects a persistent racial gap. This means that Black families on average owe a large portion of their wealth in debt compared to white families. For example, in 2022, the median net worth for Black households was $44,100, while the median for white households, not specified in this previous data. So they didn't give the statistics on that one, but I'm going to assume it was probably somewhere well over double. Some numbers I've seen have put it over the 200,000 mark. So just put context on that. So some quick disparities, right? The higher debt burden. Black families are more likely to carry debt burdens, including student loan debts and high debt payments to income ratios. Student loan disparity. Black college graduates on average owe significantly more in student loan debt than their white counterparts. For example, 4 years after graduation, the average Black college grad owes $52,726, while the average white grad owes $28,006. Intergenerational wealth. White families are more likely to receive inheritance and down payment assistance from their families, which contribute to their wealth accumulation and home ownership rates. While white home buyers are more likely to receive down payment assistance from their families, 46%, than Black home buyers at only 10%. That's crazy. Home ownership gap. These factors contribute to a persistent home ownership gap between Black and white families. As said on many videos and live streams, one of the top few ways to build real wealth in this country. Overall wealth disparities. The median wealth of white households is significantly higher than that of Black households. In 2021, white households had 9 times as much wealth as Black households. 9 times. Lower income. Black households generally have lower income and less wealth than white households. So when you look at the correlation of debt levels, P&R Connected, my guy, welcome in the building. Don't do the race baiting BS. You better than that. This is definitely not a race bait, my friend. Just continue to watch the live stream for a minute because I am not into the divisiveness whatsoever. But I do want to focus on the Black community because the Black community is struggling statistically the most. So let's keep that in mind. All right. So at the end of the day, what this goes over is that there is a serious disparity in overall wealth between where Black Americans lie and where any other racial groups lie, white or non-white. Doesn't really matter, to be completely honest. We have a huge disparity in our wealth and income levels in ratio to the debt that we interact with. And that's as individuals, households, and businesses. Now, where this becomes a problem and why you see the readings that I just went over and statistics that I just went over is that debt levels only really become a problem when you have serious issues with production on the back end, meaning that you're not having a healthy growth in production to keep up with the debt levels. That is what's happening globally. That's what's happening in the United States. And that is what's happening in Black households, Black businesses. We tend to interact with debt, and it is not for productive means. Jerome Powell, not too long ago, as of 2025, I believe, or maybe he was in a hearing and he was speaking and he basically stated that the debt levels and the deficit levels aren't necessarily the problem, even though they're really high. The problem is that the GDP is not keeping up with the debt levels. So, there's a lot of ways to break that down. There's some smart economist ways to break that down. But in, layman's terms, what it basically means is that credit and debt can flood the system as long as productiveness follows suit, generally speaking. And that's not really going to be the case for, a lot of Americans as a whole, a lot of us as a whole, but particularly for Black America. As you saw some of the disparities for white and Black households with the wealth gaps, the home ownership rate gaps, and the gaps in money being passed down to assist in the process of becoming a homeowner. What that basically means is, yes, numerically, we have significantly lower debt than our counterparts in this country, but we are, generally speaking, less productive with the debt. And that's really what I want to hammer home in this live stream is the debt in itself doesn't necessarily have to be a problem, because I know there's a lot of, financial professionals and financial gurus and content creators that are, in the Dave Ramsey side of the equation that are like, just eliminate it and avoid debt like the plague at all times. And I understand where that comes from. I've been critical of that because I understand what I'm about to break down in this live stream, and I've broken down in previous conversations. Debt is a tool. If you know how to use it, then it leads to profound levels of growth and development at much faster rates. That is why the entire world really runs on credit the way it does. It's not because we're just, humanity is just psychotic lunatics that just want to create this empty-based Ponzi scheme per se. You hear that a lot about the Ponzi scheme because of the current debt levels around the world. there's some truth to that. But also a lot of the basic infrastructure and the things that we benefit from as humans has been because of credit and debt. It's been because of the fact that the advent of credit and debt, essentially, like it allows us to expand and grow as a species, in all honesty, in ways that we couldn't if we only relied on money that we actually had on us and in circulation. Hopefully that makes sense, right? Creating new money out of thin air allows us to do things faster and more effective and create and build more. So we're able to grow and develop and sustain and build a faster, more effective and safer and convenient world because we create money out of thin air to do so. As long as that money is going to something productive, then there's really not much of a problem per se, right? That system can sustain itself for a really long time. What we're experiencing globally and what we're particularly experiencing here, narrowing it down to Black America, is that we have a significant debt level well beyond our productivity as people, period, on a planet, as governments, as individual households, and as businesses. And that is profound for us as Black Americans. So I had a poll on my channel. This is what really spawned this live stream. The poll on my channel was basically asking, what is, let's see, when it comes to debt, what is the biggest challenge for many people, right? The options were overcoming cultural and personal aversions to using any debt, which got the third lowest vote rate. Differentiating between good debt and bad debt, which was the second highest voted for. Managing high interest debt that feels overwhelming, which was tied for third place. And knowing how to use credit strategically to achieve financial goals, which was the highest voted for. My polls don't get 1 million votes, but it got a pretty decent activity level. So this wasn't just 2 or 3 people. This was a decent amount of people who took this poll, and it was an agreement that we don't know how to use debt generally, to use it as a tool as it was designed really to do. Now, mind you, let's be honest, the financial system and the overall economic system definitely uses debt as a tool to keep us spending, and we have a debt-based consumer-driven economy. So of course, there's a lot of psychological hacks, marketing, and financial schemes to keep us spending money. And that's where you have things, the advent of things even today of like the buy now, pay later situation, which is blowing up in itself as well, or slowly becoming a bubble itself as well. So I don't want to make this sound all rosy and fluffy and like it's all well intended. Trust me, I understand. There's a lot of schemes beneath this. And there's a lot of entities that need us to spend money, even when it's not to our betterment. But it is still ultimately a choice. There's a lot pushing against us. There's a lot programming us, but there's still a choice. And this live stream is determined to try to start the conversation, because it's not all covered in one live stream. A lot of the live streams I've done are really all touching on the same thing from different angles. And it's getting us to be more productive with what we have. And specifically speaking about debt, we have to understand debt in itself, in layman's terms, is really just a promise of our future income. It's an exchange for something we're deciding we want right now for a promise of our future income. And what we've done is been programmed and continue to fall for the hopes that as long as we can afford the payments foreseeably, and whatever it is that we want or think we need at that time, then it's worth it. We don't really think about the fact that we'll be paying for something for years to come, even whenever we bought and paid for may no longer have value to us. And that's where we have to start understanding, which many people on this poll agree, we have to start understanding how to be more productive with debt. You don't have to run from debt. That's not necessarily the problem. What you do have to focus on is how can we be more productive with debt? You have to understand some of the most productive parts of civilization have come at the behests of debt. America has become as powerful and as rich as it has in part because of the financial system and the way we use credit. It's gotten out of hand in recent generations. But at the end of the day, it's given us a tremendous advantage along with other components of our financial system. As households, business owners, and individuals, narrowing it back down there. I don't want to get too stuck on the global economic part of this. This is designed to focus on, Black America in particular, and of course, anybody who gets value from the video and the content dealing with debt. But I'm only, again, as I always say, focusing on Black America because we're the ones struggling the most with this. And we have the least understanding on how these things work. And even if you're pro-American as a whole, which I'm not into the divisiveness. But at the end of the day, America is any entity is only as good as its weakest link. Black America is a significant portion of this population. Us struggling and having huge wealth gaps and debt traps that we're falling into, et cetera, doesn't make the rest of the country any healthier. So that's that. That having been said, you are auctioning off your future labor for something you're buying right now. When you put context on that, that should open your mind up to understand, damn, if I'm going to make the decision to sign up for pretty much any form of debt, especially money I don't currently have when I borrow it, then I better be damn well certain that that money is going to be something productive enough for this to make sense for years to come. This is where the concept around home ownership, business ownership, to some degree, student loan debt, like depending on what you go to school for and where it can take you, the student loan debt could be worth it because you're investing in your future earning potential. So that trade-off can make sense, even though it can be burdensome as hell. But where the problem comes in is many people get in student loan debt. We either don't finish college at all, we finish in something extremely unproductive, or we finish in something that is okay, but doesn't outpace the debt that we took out on it fast enough to make sense. So student loan debt is its own beast. Business ownership is the same ordeal. Getting access to the capital as Black Americans is already hard enough. We struggle like hell with that. And I've covered that in recent live streams, and I'm going to be spending a lot more time in future live streams on it. Our relationship with underwriting and banks and lenders is not the healthiest. And it's not the healthiest with FICO scores, and debts and income ratios, all of the different mechanisms that we're measured by, metrics we're measured by, we struggle with generally in Black America, right? So getting access is one thing. Then having the ability to qualify for the debt and put it to productive use to the point where what we put it into outpaces the cost of the debt is a whole nother challenge. So hopefully that makes sense so far. What are we pivoting to making things more productive? What this basically surmises or breaks down to is that we have to become a lot more productive with the debt that we get our hands on. We are either trying to finance short-term experiences or we're financing survival. And unfortunately, great memories or desperation don't transfer as currency to banks when it's time to pay the money back. We have to use the money as often as realistically possible for beneficial purposes. This is where real estate investing, this is where business ownership really comes into play. And this is where also investing in your education can come into play. I'm not a proponent against student loan debt or purchasing debt to get into programs, mentorships, things of that nature. This is all an investment in your future value and your future earning income potential. This is where we have to focus our relationship with debt, especially early on. Car loan debt, vacations. I've even seen people doing buy now, pay later for group dinners and family dinners and social events. It's getting crazy and out of hand. Our psychology around trying to look good and enjoy the moment now is killing us culturally. It is really rotting us out of the bottom because the more financial tools that are out there to allow us to finance these experiences with the poor psychology, the wrong mindset, the wrong behaviors, is going to continue to bury us. I literally work as a retail bank on a daily basis. I see people's bank accounts all day long. That is very real. I'm not just talking about when I say this. I'm talking about real world work experience, career experience. I'm seeing people with buy now, pay laters for all kind of stupidity. And I'm not trying to say that to be insensitive. I understand that for a lot of people, these things seem important in the moment or they seem really valuable. And I know the YOLO thing is bad nowadays. People are just, like the hell with it. It's this one time I had this experience, so I don't want to pass this up, whatever. Concerts, parties. It's very important for us to understand um, we have to be more productive than this. And it's not that we want to live like this forever. You definitely want to have a time value equation on your life. That is why you want to use debt. This is one of the reasons why I advocate smart use of debt, because we do want to enjoy our quality of life while we have quality of life. None of us are like, man, I can't wait to be rich at 75. Like, ideally, we'll still be healthy as possible, but what's healthy at 75? Still walking around, still maybe can cook your own meal. You know what I'm saying? Still can coherently remember things and have a conversation. Like, these are golden functions at 75, 80 years old. You're not talking about being able to really go on vacations and enjoy yourself. Enjoy your time with your lover. Enjoy your time with your kids. Functional time in your life. This is why you want to take out, you want to use debt, because it's going to help you accomplish things faster, whether that's mentorship, education, or investing in real estate, starting, growing, and launching a business. These are going to be things that you can do at scale that can return faster and allow us to start to generate the kind of wealth and income that will allow us to enjoy life while life is worth enjoying. That having been said, there has to be a delayed gratification and a strategic phase to this. We have to have a mindset and a strategy around our first encounters with debt to the best of our ability. And I know a lot of us are adults watching this, right? Said, I don't understand. Yeah, some of these people are fine-tuned. What is it that you don't understand? Nubus, I'm not even going to try to see to pronounce the rest of it, but in case you're having a genuine question, I'm not sure what it is you don't understand. But we have to start being strategic about our encounters with debt. Debt in itself is not the problem. The problem is how we use the debt. If I take out $15,000 for a dream vacation, I cannot pay the bank back in memories. I also can't ignore the fact that I'm going to be paying that $15,000 off for 5, 10, 15 working years of my life. And all I'm going to have is the photos and the good conversations from that experience. Is it worth $15,000 when you can take $15,000 and put it into an investment property that can grow in equity, that you can create value if you need to renovate it, grow in natural equity, generate rental income, and give you tax benefits and create legacy because you can pass all that down to your heirs? That $15,000 is going to pay for itself multiple times over on one property. You can turn around after a handful of years of that rental property and doing that strategy a few times and go take that $15,000 vacation on the equity, on the income, on the tax deductions and benefits that you got, on the depreciation, and the tax benefits from depreciation. You can take that same $15,000 vacation worry-free with your asset paying for it. Or you can take that same $15,000 out in our financial system today based on your labor. And you can pay for that one-time experience for the next 5, 7, 10 years of your life or longer. Or you can even default on it and end up paying for that plus some for even longer, because now you're damn near shut out of the financial system. So this is a basic example of what I'm talking about. And I think it's also important to make sure that we put the connectors around. Yes, real estate investing is a phenomenal example of how to use debt. Business investing is a great way. But mentorships and education that you're seriously going to dedicate yourself to and use to grow your income capacity and your overall skill set and your knowledge base also counts. Don't be scared to buy mentorships and programs if they're legitimate and are going to truly be of value to you and help you increase your value. They may take longer and have an undefined time to pay back, but it's up to you to stick with it and make sure it does. If it does, then it absolutely can have an infinite return, because depending on what you learn and how you're able to apply it, it's no real limit on what it is it can make you back. You just have to stick through it and see it through. So, first time viewer, how you doing tonight? I'm doing terrific. Looks like S. Feltner, 187. I'm doing great. I appreciate you tuning in. Just in case you're curious, we're just tapping into the current scenario of debt globally, but the particular issues of debt in Black households in Black America. So again, what are some quick takeaways and scenarios? If you are currently in debt right now, right? Like, you're currently somebody who's in a significant amount of debt, your options without specifically looking at your finances, right? Which I do every day, all day for my clients. But I can't specifically look at yours unless you want to get in the comment section and see about working with me one-to-one. But generally speaking, you know, you have to start considering how is it that, you know, assess your current debt levels. You're going to have to do the unattractive thing and assess your current budget. The very basic arithmetic around this is, what do I owe? What type of debt do I owe? What is my consistent and current budget? Meaning, what are my inflows and my outflows? Do I have any cash flow left? Am I breaking even or am I upside down? Meaning that I have more in expenses and debts than I do in income. And based on those numbers, you're going to have to say, well, how do I increase my income to outpace my debts? I hate to make it sound so elementary, but it is the truth. I look at consumer and business debt all day long. And I look at people who are doing great and I look at people who are struggling. And I'm telling you that it comes down to that basic arithmetic. Am I cash flowing enough to manage my current expenses and also pay down or pay out of debt? If depending on the type of debt you have, if you still have access to capital, there are ways to use smarter debt to take care of more crucial or damaging debt. Taking a 23, 24, 25%, you know, credit card at $5,000, you know, in balances on 23% of a variable APR. If you still got access to available credit and you can qualify for a 0% credit card for 12, 18, 21 months, that's smart. That buys you the opportunity to pay down on that debt interest-free for an extended period of time. You have to start looking at your situation. Do I have the ability to increase my income significantly, start handling my expenses now that I'm looking at the raw numbers? Do I still have access to capital? Can I get 0% credit cards to take care of existing credit card debt? Can I get access to fixed rate personal loans to consolidate a fixed payment on revolving debt? That's another smart move. Basic debt consolidation. That is what you need. These are the kind of strategies you need to assess if you're struggling with debt. The answer really is income. A lot of people's problem is income. I read the statistics earlier. The debt ratio problem, the debt numbers don't look bad until you find out that it's disproportionate to the productivity, the income. You have to increase your income. So for a lot of people, depending on your situation, you may have to do a very uncomfortable level of working. That means whatever you're doing now, you may have to double down on, but you have to get that balance sheet back into the black. It has to get to a point where my income is outpacing my expenses and my debt. That is if you're currently in debt, is some general parameters. If you have more questions and you're catching this live stream live, or if you're catching a replay and you're this deep in, comment down below. I can get much more specific if I know your situation. But this is the best that I can give you without knowing your situation. Either I can increase my income, refinance my debt, consolidate my debt with either 0% credit cards or fixed rate personal loans. Something has to give. I can either basically reduce the cost of the debt, increase my income, or ideally you can do both. It's because they don't teach to save, only to spend on things that compound into a big giant lump sum. Random AF. Yeah. At the end of the day, this is a fact. It is about the teaching component. What we have to understand is more and more the information's out there. Channels like myself and other credible quality finance creators, and ideally financial professionals as well, because you have some finance creators that have no financial background that are giving content advice. You know, sometimes that works, sometimes it doesn't. But the information is more and more abundant. And right now it's a matter of finding quality information and holding on to it. We're not taught to save very much. Saving is a component to managing debt. It is not the cure-all to managing debt. You have to be productive with debt. Anybody that is, I don't give a damn if it's government, business, households, individuals, toddler or elderly, if you're going to use debt, you have to use it productively. And you have to use it productively long enough to whatever it is that you're producing can start to pay for your lifestyle, cover the debt and pay for the rest of your lifestyle if you're looking for financial freedom, like if you're looking for financial success. But at the end of the day, our problem with debt is that we use it for too many unproductive means. That is the biggest problem in a nutshell. We have to start using debt and taking the risk that it takes to manage the tool of debt for productive means. Buy investment properties, house hack your existing property. Stop buying the shiny, expensive single family home that you cannot either turn into an asset at that time or in the future. The home that I am in right now, I'm going to hang on to it for a little while longer, but it is highly likely going to be a rental property in the next coming couple years or so or less. When I bought this property, it was a great foundational set of circumstances for me and my family needs and circumstances. But I definitely bought it at a discount. I bought it on a short sale, and I bought it in an area that is going to be very attractive for either a future homeowner or a future tenant. So that is a productive use of debt. I took 6 figures, put a roof over my head, created some stability for my family and a nice place to come home to. But I also thought about the future potential. If I can't rent it out right now or make something productive out of it right now, then that means it has to have that capacity in the moderately near future. The same thing goes for investment properties going forward. My next property is highly likely going to be a house hack scenario because that's the position I'm going to be in to do so and a choice I'm going to make. And my family circumstances will allow me to do so on top of the outside portfolio of independent rentals that I'm building. So that's a different scenario, right? That is productive use of debt. Now, if I just told you I'm playing with $200,000, $300,000, $400,000 of debt at a time without the backdrop to it, and I'm spending on experiences, I'm spending on clothes and shoes, outings, parties, concerts, then that's where the problem therein lies, right? Because now I'm taking significant amounts of money and I'm putting it on something that has no monetary value or future gain. It feels good in the moment. It's great story time, great photos, great Instagram posts, but I'm not going to make a penny on it. The only way I'm going to pay it back and not have it drown me all the way out, I have to work my ass off my back to pay for it. Or I can take this same access to the financial system and the banking system and debt and turn this over into something that will start to pay for itself either now or at some point. So this is the divergence of why you have other ethnic and racial groups in this country that can take debt on and manage it in a civilized manner. But then you turn around and have us in Black America who are struggling the most, not all of us as a individual households and individuals, but the most as a collective. Most of us, or a significant portion of us, are not using it effectively. We're not using it productively. And as long as that's the case, we're going to have problems. Debt is going to get more cumbersome. It's only going to get more expensive. As you also, to close this out, or to back out on this live stream and close this out, you also have to understand the more debt that you take on unproductively, this is stifling your borrow capacity to do productive things with the debt in the future. So this is why it's important to use debt productively early. If you're going to max out credit cards, if you're going to take on personal loans, if you're going to do these things at all, it better damn well be for a productive project. If you're going to max out credit cards and take on that risk and potentially take that dent in your credit score and pay that interest, but you're going to buy you a fix and flip or a rental and you're going to take the chances of doing that, or a really strong business franchise opportunity is something that you know has a high propensity to pay you back and add real world monetary value, go for it. Hopefully you don't have to go to that extent to do it. Be nice for you to be able to borrow it at the best rates and terms, as I try to teach on this channel on a consistent basis. But if you're going to max out credit cards and put yourself in a rough spot with debt, put it around something productive. People are doing these things. You may have to, rack up some personal credit cards and max them out to get your first rental or your first burr or your first fix and flip. It sounds crazy to a lot of people. I understand it sounds scary, but for some people, that might be your situation. You have to take that first big step to get to somewhere productive. If you don't have the ability in a timely fashion to do it the regular traditional way, save up a down payment, get financed through the bank, go through that whole little rabbit hole, and you need to make moves in a relatively short term, you got a business idea, a real estate opportunity, whatever the case may be, some way to increase your net worth or your income, then this is the way you want to go about it. Let it be something that can be paid, that can pay you back, that will continue to be a monetary asset 24 hours a day, even when you're not punching a clock. So I wanted to roll this out to basically say, and again, I'm gonna be doing many more live streams around these various topics. The only way for us to beat out the negative circumstances staring us in the face when it comes to debt, relationship, our overall wealth, period, for anybody, but particularly for Black America who struggling the most at the moment. Things like our relationship to debt has to change. It has to be more productive. If we don't figure that out, I can certainly guarantee you that the statistics like the 2053 statistics of negative Black net worth and other statistics showing that we're headed in the wrong direction will continue to plague us. And our ability to, the generational wealth, catchphrase that has been floating around for quite a while in our community, will become nearly impossible for the vast majority of us. The only thing we'll unfortunately be passing down is generational debt, and financial trauma. That is all we're going to unfortunately be able to pass down if we're not careful. Our relationship with debt is crucial. We're likely not going to avoid it. We're going to use debt for things in our lifetime. Let it be productive, predominantly, until the point where whatever you're using it productively for is going to pay for the rest of your lifestyle and pay for the legacy that you're going to pass down. So I want you to comment down below. Let me know what your current relationship and circumstances with debt may be. Are you struggling with it? Are you adverse to it? Are you currently using it in productive means? Haven't really gotten to the point where it's paying you back yet, but you're investing in something productive and you know it's going to pay off at some point? Or are you on all the way on the other end where you're using debt strategically and it's growing your net worth, growing your income, and growing your financial position? Comment down below. Let me know some of your best practices or your struggles in the comment section down below. Other than that, I appreciate everybody that tuned in. I appreciate you, PNR LLC, sticking all the way through the, top to bottom. It's my true pioneers right there in the building that are looking to grow and develop. Much appreciate you, my guy. Everybody else that stayed, that legitimately paid attention on the live stream, I appreciate you. All of you catching the replay that happened to ride this out to the end, I appreciate you as well. And shout out to you for taking the time out to consume productive content for your own betterment. Shout out to you and a pat on the back for you. Links in the description below to tie in with me on Instagram. Links in the description below as well to work with me on a paid level one-to-one if you're really looking to get your handheld and get a curated guidance from a financial professional on your consumer financials. If you're looking to get into real estate as a homeowner or as an investor and want to get the lending side down pat, or if you're looking to get on the business side, getting access to business capital and structuring, developing your business banking relationships. I help across the board with those things. If you have some general questions, general, insights or whatever the case may be, I do entertain those. If you want to get in the comment section down below, I'll answer it via comment. If it's good enough, I might even do a video response. Other than that, as always, I want each and every one of you to stay focused, stay in motion. I'll see y'all soon.